Part 2 of March the 4th, 2015 at ES, or E-mini Futures Contracts, 5 minute. Back to where we were. Also here, bears selling the close, however, wide stop. If you sold this, this is a gift. They see what happened here. A lot of bears will likely take profits and look to sell higher. However, with all the buying pressure below, increases the chances of disappointment and a gap closing. However, on a side note, if the bears can continue to get a new low and lower highs, eventually we have a wedge. So it's possible we could break below here and the bears or the bulls give up. However, until we really break strongly below here, the bulls will still continue to buy new lows. So you'll see it when it happens. Again, I apologize for my voice. I'm using the microphone on my computer, and I will get a new one shortly. Back to where we were. Breakout above the double top, no longer a bear trend, making lower highs, most likely a trading range. Strong break above the moving average. However, it's okay by the close, but better to wait for follow through. If the next bar, so if you buy this close and 10-15 is a bear reversal bar, it's a wedge, you have a double top. So a failed breakout above a double top, which leads to a wedge, 3 pushes, 1, 2, 3. However, 10-15, bull close, definitely selling the close. We're definite sell the close, probably going higher. Initially, you have a measured move from the low of here to the high of here. Gap stayed open, which you can see the measured move went to here. So at a minimum, we'll probably get up to here, maybe to the open of the day, and to here. So buy the close, buy the close, buy the close still. However, 7-bar micro channel, it's a bad stop order entry, so probably buyers below for at least a second leg up. And as you can see, we got the second leg, we're at a measured move gap, so we may get a measured move based on the low of the day, which takes you up to here. Still, buyers below, we have a second leg up. The bulls did what they wanted to do. They got above here, closed the gap. Next thing they want to get back to the open to create a doji, or at least to fully disappoint the bears. Here, strong bar, but possible second leg up. Probably sellers. Still probably buyers below, but I would not want to buy up here because of the pullback. So you had a high one here. Here's a high two. However, if you bought this bar, what do you do here? If you bought the close of 1035, disappointment, you likely try and get out. The close of this bar was 96.50. Price went to 96.75. So consecutive buy climaxes 1, 2, 3. You have a high two, but forcing you to buy at the very top. Right after buy the close, bulls disappointed. So if you're buying here, you need a very wide stop, probably scaling in lower. So it's better. Smart traders will sell above simply because you have a high probability, not really great reward compared to risk. Still, swing traders will use a wide stop and probably get more up. So where I'm getting at is bulls bought the close, disappointment, set a limit order to get out break even at 96.50. Price went 97.50, turned down, possible climax bar. So you expect a retest of the low, which we got similar to on the 60 minute as I showed. We had a strong bear bar and a reversal up. So climax bar, we reversed up, went 1 tick above the bar, which we did. Did we do it here? We did not. So we made a perfect double bottom. Turned up here. You can argue high two. It's really it's a double bottom, so it is a high two. It doesn't really matter what you call it. Probably buyers above. and buyers below. You can see if you try to buy below, it wouldn't allow you. So here, still low probability, or still always in long, high probability but need a wide risk or wide stop. Here, 3 bars up, probably going higher by the close. 11:15, arguably the best bull bar of the move. So possible climax, you have a wedge, 1, 2, 3, one push, second push, third push. No way I'd buy this bar. We're at the top of the range. We're close to the open. I'd be looking to sell. We've gone up for at least 2 legs, arguably 3. Still surprise bar. Probably buyers below for a second leg up, but I'm not willing to buy this high. Similar to Al. Also, it's important to notice we have gaps. We have a gap here. We had a gap here, it closed, and now we have a gap here. So it's likely, even after a second push, which may take us up to here, that we'll close this gap. Here, you can argue high 1 buy or a wedge, low 3. Point is, we'll probably get a second leg, which we ultimately did. Here, at 11:45, you have a third push up from here, so nested wedge, 1, 2, 3, 1, 2, 3. Oh, sorry about that. So here, it's more of a sell the close bar, 11:45. Climax, possible exhaustion. Bears at a minimum expect price to come back to here and to close the gap. Maybe eventually pull back all the way down to here. So sell the close. Some bears will use a measured move. However, others, for a stop, others will, if they sell this close, if 11:50 is a bull bar, they'll exit and just wait. Sell the close. You can see we fell below here. However, strong enough bars down. It's a wedge, 1, 2, 3. So probably a second leg down. We may fall below the wedge, which the low is around here. You can argue this low, this low. 3 strong bear bars down. Probably sellers above, but may not come in at 50%. Trading range day, 50% is usually important to notice. So as you can see here, a lot of traders sold at 50%. Another thing important is if you bought this close, if you realized you were in trouble 3 bars later. So bulls bought this close, scaled and lower, used a stop order. So bought 1 tick above here. Sorry about that. As you can see, I don't have it perfectly drawn, but bought this close, added on one tick above, price went a few ticks above your entry, enough to allow you to get out break even. So selling up here on a limit order for a second leg down. Here you can argue high 1 or high 2. The point is, second leg down likely, not a great signal bar, bad contacts, middle of the range. So probably sellers above for a little more down. Here, probably going lower, but looking to sell, or looking to buy. We closed the gap, closed it over here, may test down to here. Probably more down, but getting low in the trading range, getting close to 50%, depending on how you draw it. You can argue here. You can argue right there, or even right here. Point is, it's an area to buy. We've gone down for 2 legs. Here, still probably going lower. However, here, the bears did something very disappointing for the bulls, which was expected. You had a wedge. Arguably, we fell below it, reversed up, fell below support. You can argue spike and channel. Spike, 1 push, 2, 3, 1, 2, 3. Excuse me. I'm going to get a better recording program. However, this one only allows me to do it for 10 minutes at a time. So I'll have to make another video, but it won't be that long. Thank you.